Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Jobs Friday pre-market webcast. Okay, so the jobs report came out, and what we've done basically is, well, first of all, let's talk about the roll for a minute. We're rolling from the March contract into the June contract, and if you're new, what that means is the futures trades in 4 contracts a year. Those contracts expire, kind of like an option. And so there's a point in time where everybody moves from the contract that's going to expire into the next contract, which expires in June. Way back when the dinosaurs roamed the earth, there used to be spread traders, and it used to be a big deal on the pit floor, and trading the roll took on kind of a life of its own. But in my opinion, that all got taken out by a meteor. So basically, all the roll does now is screw up our charts for like a day or two, okay? So what I have up here is a continuation chart. And you can see the green dotted line there that says ESM7. That means that we're moving from March, June, okay? So when your 5-minute chart last night, especially if you're on Thinkorswim, went down a few points, it's not because you lost money, it's because they moved from one contract into the other. And right now, the difference in price is about 3.25 points. So, what's happening in the market now? Okay, so we traded down to the daily midband yesterday. We traded as low as 54. So we got the move that we've been looking for. And to say it's been a great week in the room doesn't really quite grasp it. So down, and then they V'd it back up again. We talked about that in the daily wrap-up. And if you're not following us on Twitter and Instagram, I think you really should, because you're getting 2 more webcasts a day from me. I'm doing 3 a day now. And if you're not following, that stuff doesn't go up on the website, and it doesn't go up on YouTube. So you've got to be there on Twitter. You got to be there on Instagram. And you get the midday update, and then you get the daily wrap-up. So we talked in the daily wrap-up. We do down to 54, and then we V back up. What we've seen in the overnight is we see it kind of start heading higher. We're over the 9-day. The 9-day on the June contract is right around 23.70 even. We've traded as high as 76. Now, what we're starting to get involved now up here is the weekly pivot. It's adjusted for June at 76.75. We printed 76.25. Where I come from, that's a test. One of 2 things is happening today. Either we are in the midst of the first of probably many bear market type rallies. Bear market rallies like to die at the weekly pivot. They also like to die on the jobs pop, both of which we're getting at once. So right now we're currently short against this weekly pivot. It may work out, it may not, but it's a trade that you've got to take because the risk reward on it is fantastic. If you're wrong, hey, that's trading. You respect your risk, you take your hit, you move on. The other thing that might be happening, and what I think is probably more likely in the big scheme of things, is we did a move this week down very orderly to the daily midband, and the daily midband did what we said it was going to do when we got there. It rejected and it bounced. So the whole issue, spring of 2017, is all about, for me, what do the bears do with this first bounce off of the daily midband? Are they going to step up, stand in, make a lower high, and then make a lower low below this Thursday low? Or are we going to get more of the same? Are we going to get what we've seen for the last 8 years, which is a move back to the daily midband that holds, higher lows, higher highs, and if that's the case, that 24.01 all-time high doesn't have a chance. It's going to get taken out. Okay? Is that going to happen? I have no idea. But what happens in the next 1 to 2 sessions is going to have a lot to do with it. The Bears got their move down, but remember, if we're trading between the mid-band and the upper band, we're in a buy the dips market. If the Bears can convert this and establish the daily midband as resistance, then our basic principle morphs into sell rallies. This thing goes sell rallies, and then you get into more of a bearish type spring, where it starts to open up a move down to the lower band on the daily. I mean, that's not all that far away. It's like 23.22 right now. So, nobody's saying that we've topped out forever. Nobody's saying that we're going to, go Wile E. Coyote off a cliff. But what I am saying is it's moved down exactly where we thought it was going to go. It's bounced exactly where we thought it was going to bounce. And now we're into the next part of the thesis. What do the bears do with it? Do they defend it or do they lay down? And we'll know by Tuesday, Wednesday of next week. Okay. Everybody have a fantastic morning. Get on Instagram, get on Twitter, and if you do, I'll see you for the midday update. Follow us on Twitter at Princetontrader. Come check out our website, Princetontrader.com, and come take a free trial in our chat room. I'll be back tomorrow morning with another webcast. Trade 'em well, everybody.